The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the show today with gold because we are at the proverbial moment of truth, looking at this over an 8 or 9 day period. Last night, we took out the lows from March 4th by one tick. Can you believe that? 1250.10 was the low back on March 4th, and we took it out at 1200.50. Maybe there was an order setting there. Who knows? Now, the first chart that I've put in here is that chart from Larry Edelson. And what it is, it's basically a neural network. And I can tell you he's reran it. In other words, he's put in new data to make his prediction a little bit more current. And when he does that, I can tell you that he's using back propagation along with some fuzzy logic. But what it's doing is it's going back in time to see the last time the gold has moved in this type of a pattern over a period of, I don't know how many years are going. My guess is they're going all the way back into 1972 when we first started getting good data on gold, and that's when we first started actually trading it live, because it was illegal up until that time. Now, the gold is really interesting here. And the reason why I'm going to show you this is because I want to walk you through what I'm looking at from a pattern recognition standpoint, because gold had a great deal of support at that 786 yesterday. And what happened was it failed. I mean, right after the market closed, you'll notice here that it broke down from the 1262 level that it had held for, oh my goodness, about 3.5 hours. And now that sets up a profit objective down here, or the next level to look at is down here around this 1245 level. Now, if we go just a little bit deeper here and see where we are right now, and this is what's happened overnight. So I'm just trying to show you how the low was made and what's going on, because this is really clear to me. It could be as clear as mud to you, but it's clear to me. And I just wanted to show it to you here, because this is what's happened to gold. And we took out that low, as you can see. We did take out the low that went way back to March. That came in at 1250, and we went out to 1250. This time, the other one was 1250.10. Now, you'll notice that we have an A, B, C, D setup coming down from the high that would complete down at this level around the 1245 level. Remember, the harmonic number in gold is 34 and 17. Those are the two numbers that you see most likely when you're watching things. So if we take the high, say 1282, pretty much is what it did, and we subtract 34 from that, that's going to take you down to this level that we're looking at. So this is going to be really important. There are two 1.618 expansions coming in there from previous swings. So that's where you want to be looking at. If you missed the first part of the gold run, this is the time to buy it again. Everybody that bought that breakout at 1250 is wondering, what's really happening here. So if we can wash those out around the 1244 level, then 1245, 1244, then we've really, got a really good place, because we know that if you don't have to risk very much at that point. My assumption is probably $5 would be the most that you would have to be looking at risk, and the fact that it's a $125,000 contract to only risk $500 on it is pretty good. Whether that's going to happen or not, I don't know. It's just that it's a really nice pattern that is set up here. Gold has been very harmonic so far, and we'll see if it's going to continue to do that. Silver also is very interesting here at this $15.20 level, because it's making just a normal pullback, and it's been far weaker than gold, all along. We've shown charts to that effect, and other people have said that we'll see what's going to happen with it. But one thing leads to another, and that'll tell us whether we're going to come down a little bit. But if we take a look at silver here, just on the little bigger picture here, you'll notice that the pullback that we're having now is going to be, we've come all the way down to the 1520 level last night, and we're trading around 1530 right now, and that basically has completed a 20-man line at that level. So I'm been bearish gold. I'm out of the market right now. I trade shorter term swings, of course, but we're very close to this level, and I'm certainly looking to be a potential buyer if we can break another $7 down from this level. That's what it looks like to me. But folks, if we get below 1240 in the gold, I'd have to really reassess in any long sides of this thing, just because of the technical pattern. Not counting what Larry Edelson work has been going on with the gold neural network, which has been spectacular, by the way. But you've got to look at the patterns, because that's where you determine what your risk is. There's no place on your equity run that says this is time sensitive. They do that in the options, but they don't do that in the futures. So you've got to control your risk by basically looking at the patterns. The other thing that's happening is the fact that we've had a lot of strength in the Dow Jones overnight, but none of that strength has come across to the Nasdaq or the S&P 500. The Dow Jones rallied almost to an exact high of yesterday's high, the high several days ago, excuse me, whereas the S&P could barely make a 61% retracement up around the 1992 level. So it's going to be also, very, very interesting, to watch that. Now, we've got some nice information here from one of our listeners that looks at the DAX overnight. And I know some of you folks don't know what the DAX is, but that's basically the S&P of Germany. And this is just a 5-minute chart, showing the patterns that are there. And you can see the 78.6 retracements, and you can see the 61% retracement with the higher bottoms and the ABCD patterns forming. And then if we take it just a step farther, which he did, and you'll see that we will be looking at the level here that we went up to, we'll just put this in here if I can find the little camera. There it is. You'll see that we were going to measure up to around the 9800 level, and the 1.27 expansion on this was at 98.26, and the high today so far in the DAX was 98.36, within 10 points, and now it's trading below 9800 again. So whether this is the completion of that smaller 2-day pattern, I'm not sure. The only reason I'm bringing this up is to show you that no matter which chart you're looking at, as long as it's liquid and actively trading, you're going to see a lot of these patterns form. And remember, they don't always form and they don't always work, but it's the best I've found as far as trying to find something that gives you an idea of what the heck's going on out there. I certainly don't believe, in the fundamental part of this, but it certainly makes sense when I look at the technical picture, because to me it's as clear as you can possibly see. So these are some of the things that I'm looking at this morning. We've got to take a break already. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and as we were speaking, the gold has now come down to the 1245.80 level. Now you're going to get a chance to see a grown man cry, because when this one fails, you just go on and look at the next one. So we'll see what happens with gold for the rest of the day, but it's certainly interesting to watch what's happening right now. It's just a pattern being completed. That's nothing more, and believe me, these darn things fail a lot. So don't put too much stock into it. All I do believe is if we get below 1240 in the gold, then this whole picture of some bullishness, it's certainly going to be challenged a bit. That would be my guess. So we'll have to wait and see. Now, the next thing we want to do is we want to look at the S&P 500, because we have some very same type patterns that are forming here. What we want to do is to see where we were just the other day when we completed that big ABCD pattern up there around March the 6th. By the way, this is the anniversary date of the bottom or the start of the big bull market in 2009. That's when all the banks were failing and they needed a lot of money. Boy, is that a crock of baloney or what? Anyway, we're going to take a look at the E-mini, what's happening there. After we looked at this pattern here, we mentioned that there was a very strong possibility that this could be a 1-3-5 pattern, where 1 being the top, 3 being point C, and then the 5 point was what we hit yesterday when we made the intraday high up at that level. Now, if we go just a little bit closer in time to where we are right now, we're going to be able to see what's happened since that time. You'll see that that 1-3-5 pattern quite clearly here on this, but you'll see what's happened since that time. We came all the way down and we hit the 78% retracement of the low from late February, back on the 29th. That completes a very large ABCD pattern, but you'll also see here, when you're looking at the blue lines, the ABCD pattern to the downside that measured down to this 1975, that was a 78% retracement. The actual number on the 78% retracement was 1975. We got to 1976. And I think 1976 and a quarter. And since that time, we've rallied back to make a 61% retracement now. So if we can get this S&P above 1996 today, it's got a chance to be actually very, very bullish. And remember, these lunar cycles that we're looking at and the new moon coming in yesterday and today, these are shorter term cycles. So anything can happen here. So you've got to be, extremely careful looking at some of these, because if it fails, that means we've made a top already. And if we take off from here, it means this bottom that we made down here at 1976 is very, very important, because it did it in such a beautiful fashion. You have two ABCD patterns in there. You have a 3 drive to a bottom pattern, and you have a Gartley at 1976 also. So that's mother, God, and country stuff, folks. That's a big deal. You got to pay pretty close attention to that kind of stuff, in my opinion, anyway. Now that's covered the main stuff. Now I've answered a few questions that people have asked me about. We were going to have Rich Anderson on the show today from Anderson Capital Management, but we have a grain report today, and he's really busy on those days, so he has to prepare, so I'm not able to get him on. We'll probably have him on either tomorrow or Friday. The other one is Mario Draghi, the European central banker, is also speaking today, and that's the equivalent of Janet Yellen, as you know. So there'll probably be some more shenanigans, or well, I guess that's a good name to call them, because they're just playing games. They're just printing money. But I wanted to talk a little bit about the corn and the beans and the wheat, because I think we're very close. We've got that crop report today, and I don't know if it's going to mean very much or not. It might be. This type of crop report usually doesn't mean too much. It's that spring planting intentions that'll be coming out pretty soon. That will be the one that's interesting. But if we look at this Dees corn chart, and December corn is the new crop corn, folks. This is the stuff that has not even been planted yet. They plant that stuff in April and May, and it's harvested in October and November, and that'll be the crop for next year. What they're looking at now is most of the people are watching May and July corn. What I'm looking at here is December corn, because it has a different pattern than the May and July corn. May and July corn did not make a new low in January, whereas we did do that in February in the December corn. So that completes the 3 drive to a bottom pattern very nicely in new crop corn. And as you can see, the cycle that's there, it's 37 days between cycles, and that's just the nominal cycle that occurs. And what happens when the market starts to move, that cycle will shift. It'll either expand or contract. It does that all the time. Very seldom do you see it go more than 3 repetitions in a nominal cycle. And the reason why is these cycles are natural in nature. They're not just drawn by pencils like this. They're expanding and contracting because of the spirals that these cycles are based on, and that's primarily what we're watching. But we've got a really chance here for corn, so you've got to pay. Well, you should pay. You don't have to, but you should pay some type of pay attention, because this could be a big move. We had a dollar rally in corn last year, and that was equivalent to $5,000. When you stop and think, the margin is very little on that. That's 2.5 times what margin is. You'd have a really good probability of making some serious money without risking very much. So we're watching corn, wheat, and beans, and corn is by far the quieter of the 3 grains. The beans would be the wildest, wheat second, and of course corn the last. And corn is our largest crop in the United States. It's one of the largest crops in the world, but it is certainly our largest crop here in the United States that we have. We have a question about copper, if that was a valid pattern that we had in this in the copper contract. It was a valid Gartley pattern. It came in just about exactly at the 61% retracement. We've since sold off a little bit from that level, but we'll have to wait and see what the correction is going to be. The last time we made a correction, copper corrected 15 cents. So if we correct 15 cents from the high that we made, that'll take us down to roughly around 1208, and that was, excuse me, 208 per pound, and that would be a 61% retracement of the bottom that we made back on January the 19th. So that's what we're watching in the copper market. We've had a request to take a look at John Logan's favorite stock, international business machines, and we'll put that up here to take a look at it. And here again, you can see that we have a market that has hit a 61% retracement, and it's been had a very big gap back in February. I guess it was some type of an earnings announcement, or maybe it was the fact that IBM was going to go into cellular phones or something. I don't know. Anyway, whatever it was, it caused them to rally up, and we've had the biggest rally that we had in quite a while. It stopped exactly at the 61% retracement of the October high, so that tells us there should be some resistance here in IBM up at this 140 level. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, and we have Brent Martinez. Sorry, Brent. Brent from Martinez, California. How are you?
How are you, Larry? How are you doing, Larry?
I'm okay. Just recovering from that faux pas that I just made. Anyway, it's good to have you on board here. I posted the chart for those of you that wanted to see the 20-man line in silver. I just put it up, and you'll see it comes in there at 1520. So we'll look to see if that's going to mean anything or not. Now, what's interesting is that we did not take out that March 4th low yet in silver. We did it in gold, but not in silver. Go ahead, Brent. What was your question?
I wanted to talk to you, take a look at crude oil if you could. I'm looking at the J contract.
Sure, the April.
And my specific question was about the two previous bars that we had, candles that we had, the parallel candles that are almost identical and you know, the size of them basically.
Yes,
I
that's
didn't
correct.
know if there was any particular significance to that in your experience, or it's just kind of a non-issue. I just wanted to get your opinion on it, please.
For shorter term, I don't think it means a lot, but longer term, you know, we've completed the same amount of rally that we did the last time we had this back from I think it was in September. You know, we rallied $10 or $12 a barrel. We've now rallied $12 a barrel off the bottom here, but you know, it's becoming very, very tradable. It's not you know, $3 up, $2 down like it used to be. It's, you know, it's within a dollar and a half every day now. So that's a sign that the bottom is in. It's just a question of, you know, what is it going to do on the downside? That's pretty much what we've been watching.
Yeah, it's interesting. I've been long it, and it's been a very good trade. I just was kind of curious about to see
Well,
the
it looks like it could have more legs, that's for sure, because all we've been able to do was to just back off to, you know, $2 a barrel, which isn't very much considering that it's ran $12 a barrel. So I think there's an oil report today, but those haven't made any difference anyway. So that's going to be a non-event also.
Yeah, we'll see what happens with that. Well, I appreciate it, Larry. Just have a great day. I've talked with you long. I'm on this train, and it's kind of distracting, and I don't know what it sounds like on your end, but it's on my end. It's like a lot of background noise.
It sounds like you're on a train with a lot of people. Just travel safe, my friend, and we'll talk to you soon, okay?
All right, take care, Larry, and it's great talking with you again.
Okay, that sounds good. Thank you. Okay, well, we've started. They got the bulls in camp today. The market's moving a tiny bit higher. You're taking back some of its losses, but we'll see if that's going to be much of a factor at all before we get done. As it's relating to crude oil, you know, we did go from 38.40 down to 36.10, and the 61% retracement on that oil comes in at 37.53. So we'll have to watch that with a little bit of a close eye just to see if that's going to. I would love to see the oil back off about $4 or $5 a barrel from here to come down to about a 61% retracement of that $13 rally we had, which would be a $8 break. So that would take us down to about 31. And I would really like to be a buyer of oil at 31 because I think that the bottom is probably in. Hey, I'm not thinking like fundamentals. I'm just looking at the chart. It looks like it could be a really good bottom end because of that 3 drive to a bottom pattern that we had, you know, on that longer term chart that we've been watching, you know, for quite some time. That has, you know, certainly fulfilled its bottom by rallying $13. You want to buy that retracement back if we do get, in fact, get that retracement. So that's what we're going to look at. Now, I've had a request to take a look at some stocks, and one of the ones that has come across the desk is the Netflix. This stock has been, it trades just like all stocks that are, you know, liquid and active. You can see that we had a beautiful ABCD pattern here a couple of days ago. Again, you can see the 20-man line that's there where the market rallied back to that line. And that line really means something, especially when you have an ABCD pattern that comes up and touches it, because that's how parallel channels are made. That these old highs and old bottoms, they act as natural support and resistance. Why, I don't know, but you just see it, you know, over and over again. So this is one of the things that you want to keep an eye on when you see a chart like this, because the ABCD pattern in a bear market, you know, that's what Gartley said, you must sell that one. And that's actually the first major ABCD pattern that we've had in the Netflix since it topped in December. It went from 133 down to 78, almost dropped in half. And then there's your first ABCD pattern right there. Now, if we get above 102, then that will certainly, negate this. But right now, that's what you're looking at with the Netflix. It's a very nice pattern and is performing pretty much like we had hoped to. Now, the next one that we've had a request for is we're going to take a nice trip, and we're going to go to Las Vegas by way of Macau to visit Steve Wynn. And we'll see what we have here. You'll notice that the Wynn daily chart has made a 61% retracement of the high we made at the very beginning. Of course, this stock has went from 257 down to 51, so it's certainly in a bear mode, but we've had a tremendous rally here after we made the little Gartley pattern that you can see there on February the 10th when it was trading at 55. It went from 55 to 88, and now it's back to 80 again. And there should be really strong support in this stock as it pulls back down to the 70 level, because that would be a natural recurring numbers that have come in from the old highs, and it also be a nice retracement number from on Wynn to take a look to be a potential buyer of this. So this is a really key day, folks, and the reason why is the fact that we've had this this new moon come in. Solar eclipse, not so much. Norm Winsky's, giving us some information that solar eclipse do not have as good a predictability as lunar eclipse, and we have the lunar eclipse is going to come in with the full moon on March the 23rd, which is also at the spring equinox. Now, we're going to give a little gift today. Anybody can tell me the most significant astrological event that will happen in the United States today. I will give you a hint. It is coming from Southern California, and no, it's not San Diego, and no, it's not Los Angeles, but it's coming from San Diego and not from Los Angeles. It's just south of Los Angeles and north of San Diego. Guess what it is, boys and girls? The swallows come back to San Juan Capistrano. They do it every year at this time. It's hard to believe, but this is how they come back, and heard that on the news. But can you imagine how these birds come back every year from South America at the same time? That's just hard to believe. We took the family down there to see that once, and it was really fantastic to see these millions of these birds. And we got some really sick people here at TFNN. We need to up the medication to some of these folks. Anyway, it's very interesting. Here in Tucson, we have bats that do the same type of thing. They come out at night at the same time down in the southern part of just north of the Mexican border, and that's spectacular too. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and we're going to take a look at the used to be $700 taco stand. And what I'd like to see is you'll notice these two island reversal patterns that we had here. You'll notice the second island reversal pattern after the big top was made. We made an ABCD pattern. I happened to be in New York at that time, and my good friend Byron Tucker took Sarah and I to lunch, and he surprised us both by taking us to the Chipotle Mexican Grill. I mean, I've known Byron for 35 years. We've never had a Mexican meal together. I love Mexican food. I didn't think he did, but we went to this thing, and I didn't know anything about the stock. Well, I'd seen the stock, but I didn't know anything about it. And anyway, I said, how can anybody get this stock at $700? That's insane. And I said, you ought to buy a put on this. And of course, I don't do anything like that. But he didn't buy one either. But the day that it gapped down, which was way back in October, you see the breakaway gap to the downside, completing the second island reversal pattern. It's just been straight down. Now, we just completed the second ABCD pattern here in Chipotle Mexican Grill, up here at the $541 per share. I don't know where it's trading today, but that's a complete Gartley. It's at the 382 level, exactly the 382 off of the high. It's a perfect ABCD pattern also, so that's Mother God and Country stuff. So, you know, that should be the one that would be making it look like, you know, whether it's going to work last night, we'll have to be able to see it. But I can't imagine how all those stores are all having problems. There's something not right here, folks, because there's a lots of folks out here that have restaurants that buy local stuff, and they don't have that problem. So I don't know if something's not right. I mean, it just doesn't make any sense that it's nationwide. We've not had any trouble here in Tucson, from what I've heard, but that's neither here nor there. We'll see what's going on. Well, the gold just hit the 1244, boys and girls. That's it. Color me happy, color me sad. I don't know whether I'll be happy or glad, but we'll see. Anyway, we'll see what happens to this. I'm going to use a $4 stop in it. I've been short. I covered it a little too soon, but that's the way it goes. Someday it's chicken poop, someday it's chicken salad. That's the way you mix it. So anyway, we'll watch it here. But if we get below 1240, I think you can kiss that darn that long position in gold for a while. It's going to probably come down a whole lot more if it doesn't hold this 1244 level. I know it's a very tight stop at 1239, but frankly, I don't want to risk any more than that. And that's just the way that's the way I see it. Stocks are really quiet this morning, given the fact that we've had some pretty good move overnight. But we'll have to wait and see if the S&P can get above 1995. That's 10 handles from where we are right now, which is not very hard for that to make up the 10 handles. Now, the currency markets backed off a little bit. The euro still looks like it wants to go down, to test that, to complete the long-term weekly charts on the euro takes it down to about par, 100 or even 99 to 98 if the brig exit happens, and then we'll see if that's going to be the case, because that'll affect the pound also. And the pound also has some really strong support down there at the 137 level that we've seen. We've got to 138 before, but we could go down and test the 138 again, 137. There's a lot of support going back to 1985 that was shared to us by our good friend, Jim Bartolione. So we want to respect his work because he does a great job. I want to bring up, as a matter of fact, I wanted to bring up the updated chart that we've had from Bart on the weekly chart, giving us the New York Stock Exchange Index. And as you can see, there's a great deal of similarities between what happened in 2009, 2007 to 2008 to where we are right now. You can see the big butterfly pattern that's formed here, but this is the pattern that is the most alarming from a bearish standpoint. Just looking at the prices itself, this just been following just nearly perfectly. So we'll watch to see what's going to happen. Tomorrow we'll complete the lunar cycle for this lunar eclipse, solar eclipse that we're in right now, the new moon and solar eclipse, and that doesn't have a band more than a day on either side. So by the 10th, we'll be able to see what's going to happen, with the market. But it's got to hold these levels of 1975 in the S&P. I think that it will right now because it's just not selling off very much. And there's nothing, really exciting going on at all. So I'm just going to wait and see, what happens with it, and then we'll make our next decision of whether we're going to do that or not. Could someone please give me the last price of the of silver, please? I'd really like to know that. I'm not able to pull that up right now while I've got the thing running. I'd like to know if the silver has held the that 1520 level, because when we made the new low on gold, I just wanted to see if silver took out that old low from March the 4th. But we'll see what's going on. It's last at 1525, so it hasn't done that yet. So the low was 1521, so that's within a penny. Just keep an eye on it, folks. There should be some support at the 1245 level, 1244, 1245 level in the gold. And gold just bounced up to 1245.60, so I've made $1.60. Should get out of it right now, I guess. Take the $160 and go to the racetrack. And it gives me enough for 14 $5 exacta tickets, a nice dinner in the Turf Club. Unfortunately, we don't have a turf club or anything like that here, but we'll see. Now, I wanted to bring out the bond market because the bond market went right up to the area we were looking at for resistance yesterday, which was at the 164.20 level. The high was 164.26. We've now backed off to a 61% retracement of that move today, given the fact that the market rallied a little bit. So we're strengthening in the bonds right now, which should give an indication that maybe the stocks are going to come back on again, and the risk off will come in, and they'll start to move into the risk on. I never did get that darn thing straight. Why don't they just say long or short? It's so much easier. Anyway, let's pull up the bond chart right here so we can take a look at it to see what happened. This doesn't show the overnight pullback, of course, but it does show the resistance that we're looking at here in the market. You can see that we did pull down to we got all the way down to the 162.19 level. We're now trading at 163.09. So it did make a 61% pullback of that move. And now if we can get above the 165 level, this thing could be off to the races. But again, if we go below 161, then you're looking at something totally different. Then you're looking at a market that wants to go a great deal lower. That's the way it looks like. Not very many people calling in today. Color me sad. I thought there would be a little bit more, but we'll see. We've got to take a break. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I put a chart up of the euro, and basically that's what I've been watching from a daily point of view. You notice that we've rallied back to the 38% retracement up here at the 110.50-60 level in the euro. Now we're trading down the 109.50, somewhere in that ballpark. If we can get the euro below the 108.90 level, that's going to set up a move to the 105 level. And of course, 105 gets us very, very close to the long-term weekly chart, which measures to around 99 in the euro. Those of you that don't remember this, but back in 2000, when the euro really it actually came out in 97, but in 2000 is when they issued the coins and the currencies. And I was fortunate enough to have people in every country sent me the change that they were using for the euros, and particularly the Italian coins were the most beautiful, in my opinion, because they featured the work of Michelangelo and Leonardo da Vinci. I had sets of these from 22 countries. And I gave these to my grandson to put him in his safety deposit box, because you're not going to be able to collect those. He was 0 age. He just was born, and it was really amazing that he did that. And now, what did he do yesterday? He went out and he got his driver's permit, and he said, no. He said, what am I going to use for a car? And I said, well, we'll have to think about that, because we've been saving for it since he was 8 years old. Each week I send him a little bit, a couple of bucks here and there, so that he can put it away for his first car. I had to wait till I was 19 for my first car. It was a 1949 Mercury, two-door convertible. I wish I had that car back again, but paid $400 for it, which was a lot of money at the time, but I had made the money off of a little stock caused elastic stop nut. Anyway, we'll get back to the markets here. Watch the market. If we get below 1970 or so in that S&P, folks, we are going down. If we go above 1999, we are going up. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.